Hi, it's Stan Reinford, and welcome to this week's market update. Again, thank you for the great conversations, great compliments, great suggestions, getting a lot of good feedback on using the 10-year treasury here in the center, which is highlighted. So let's jump into it. So, again, the saga continues in the Middle East. So, we're going to have to wait and see what happens there. But let me get into the candlestick charts here. So, down below here, we have the 10-year treasury. So, now the chart that we're following, the higher we are in this chart, rates are higher. The lower we are means rates are lower. So, again, you'll see that over the last week and a half, we've actually gone up. That was because we were coming down because everything was supposed to be, straightened out in the Middle East, which again, the markets were not that comfortable with it. They did not believe in it. Of course, it didn't happen. So right now we have oil that's gone back up to about $80 a barrel. We have the U.S. who has taken control of the Strait of Hormuz and is talking about charging a fee for protection over there. Again, that did not sit well with the markets the other day, so we'll have to wait and see what happens. So, fingers crossed. So, let's talk Fed. So, on Monday, Christopher Waller spoke, Fed president. Fortunately, he did not calm the markets. He actually made them very, very nervous. And in fact, after he had spoken, the future markets had built in a 50% chance that there's going to be a rate hike in July. Well, then Fed Governor John Williams spoke, and he actually had some really good comments in regards to tariffs and oil prices, which then calmed the markets. And right now, you have Kevin Warsh yesterday and today, who was on Capitol Hill doing his testimony and going over everything there. And again, probably not going to give a lot of forward thinking here because, again, he doesn't want to do that. So, in the meantime, he has set up 5 task forces, which those 5 task forces have a lot of top economists and CEOs from large companies. So we'll have to wait and see. Many believe that he is going to be tight-lipped about some of these findings, although he did make a comment the other day that as some things come up, he may release that information again, probably to calm the markets and things like that. So we'll have to wait and see what happens. So, but one of the things, like, let's actually talk CPI and everything because CPI actually came in really good. So, which actually calmed the markets, and so did PPI. So, one of the things that I found out that is built into CPI, the inflation numbers that I didn't know, was the fee that you pay to your financial advisor. So as right now, stocks and mutual funds and everything are doing really, really well. So as you're doing well, if you're paying a flat fee, which most people are, paying a flat percentage, then that fee is going to increase. But if you're making more on your money, is that really going to affect overall inflation? Probably not. So again, hopefully that's something that they're going to look at, and we'll have to wait and see what happens. But right now, the CPI for the last 12 months has been about 3.5%. Again, the Fed's target is 2%. So we'll have to wait and see. We've got a lot of big news coming out this week, so let's see what happens, especially with oil and what's happening in the Middle East. But right now, interest rates, again, interest rates have gone up a little bit here. So every circumstance is different. There's about 15 things that go into pricing your interest rate. And most lenders are not helping you understand what's happening out there in the market. These little lock buttons that we have here, the people that I follow, they help you understand the markets better so that most lenders out there are just transactional. They're not going to be able to advise you the proper way here and everything. So again, we help those that are buying or refinancing, whether it's a primary residence, second home, or investment property. We help with reverse mortgages, cash out refinances. We're saving a lot of people a lot of money, even helping them. Even they're trading 3% rates for higher rates and still saving them a boatload of money and still showing them how to pay off their property sooner. Again, we're here. Please call us if you have a circumstance for you, yourself, or a client. We would love to help. And please forward and share. And I look forward to seeing you next week.